Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. As promised, the one and only Mr. Greg Dickerson on Monday morning. How you doing, sir?
Doing great, Michael. Good to see you.
Hey, man, video one. I think we got to talk about the crypto world. You and I occasionally have talked about it. You follow it much closer than I do. There's some crazy things going on in the crypto world. Just last night, Celsius Network essentially stopped redemptions. Then this morning, I saw Binance has had to stop redemptions. It is this is part of the bottoming process or part of pain. Warren Buffett calls when the tide goes out, you see who's swimming naked. Sometimes we're surprised by who's naked. So what do you think's going on? This is wild to watch from the sidelines.
Yeah. I mean, it's typical bear market activity in the crypto space. It's been through cycles in the past. And first thing that happens when you get big sell-offs is, exchanges will lock up. They won't let you, redeem your tokens. They won't let you liquidate, those types of things. And, it happened back in March. With the stock market, it's intentional. With these companies, it's a liquidity thing. So they don't have the reserves. So like Tether, the big stable coin Tether, I mean, they don't have full reserves. And if they had a run, if people started redeeming Tether at scale, they could not cover the redemptions with cash. They'd have to stop. So that's what's going on. People are wanting to withdraw their assets from Celsius and, some of their rewards that they're getting, because basically what that is you stake your crypto there and then they pay you back with like kind, or they print Celsius tokens and pay you back in that, and they're offering these crazy APYs that they just can't cover.
They can't.
Works great in the bull market when everybody's coming in, liquidity's coming in, market's going up. But when market's correct, these are the types of things that start to happen, and you see the structural foundational cracks in the system that get exploited. Like you said, the tide goes out and you can see who doesn't have any drawers on. Yeah. And that's what's happening, but it's just typical stuff.
Yeah. I mean, the Celsius Network, the little bit I read about it this morning after yesterday's it was all over my feed, right? They stop. You can't get your money out. Classic bank run. They were offering like 20% AP, interest. And folks, that should have been a clue. I think they just raised like $800 million in the public markets, and they were just living on debt and hopium. And when the market turned and you had Luna blow up seemingly yesterday, I think it was 3 weeks ago. And then you have this CEL coin, which is Celsius's coins, dropped 97%. You had to know that most of their balance sheet, which at one time was 12 billion, was this fake coin. And then they don't have enough assets to pay off the 8 million, and it just blows up, and then everybody runs at the same time. And
it works as long as everything's going up. You have buyers and things like that. But when people lose their money and leave the space, and when you go to redeem your rewards and sell them and liquidate those, so if you're earning Celsius for staking your crypto there, the only way you can actually turn that into cash is to sell it. So if everybody unlocks and starts selling, that's what happens. So it becomes a bank run, kind of what happened to Luna. Mm-hmm. Same thing. They had a staking thing. And the other thing with Celsius, they're a lending and a borrowing network. So you can stake your crypto and you can borrow off of it. And that's kind of been their game, right? As people will stake and they'll lend that out to other people. And it's multiple layers of levered up, kind of like the housing market back in 08, 09, the way those mortgages CDOs were repackaged and leveraged up. And there was, 100-time leverage in the system. Crypto's the same way. There's probably 1,000x leverage with Celsius and crypto in the system. Tether does the same thing. They take, if you buy Tether, you have to send them your money. They issue you Tether. Then you can go out and buy crypto with that. But then they take your money and they buy, commercial debt with it. They buy, risky assets with it, thinking that you're never going to redeem it because you just keep using your Tether in and out of your positions. And, they could, when the market's good, and like they did last year before this correction and before all eyes were on Tether, they could just print Tether out of thin air because they control the system, go out and buy assets, liquidate it to generate cash. That's what they were doing, and to pump markets up and down. They can't get away with that right now because the market's tanking. So they can't just go out and print, $1 billion worth of Tether and buy Bitcoin and liquidate it, because now people are onto them. They're tracking these transactions. Mm-hmm. Celsius was kind of doing some of these things too. They were trading in and out and doing some things. And there's going to be a lot of stuff that's going to come out of these things between Luna, Celsius, Tether, when all the dust settles and when people start digging into their books. And when you have a company, just for people watching like Tether, that will not allow an audit of their books, an audit of their assets, and they won't produce, and show real proof of the assets that they say is backing the money of yours that they're holding, there's a problem. If you got nothing to hide, you show your books.
Yeah.
And the problem is they're laundering money, they're printing Tether, and they're using it to buy assets and sell. So I mean, that's what's going on, and that's why they won't show proof, because they can't. Because if they do, they might disappear.
Yeah. Well, the other thing I think is important about this is everybody's hopeful that this is the end. I would think this is just the beginning, or if you're going to use a baseball analogy, we might be in the second inning. I think there's a lot of crypto washout coming. Luna was maybe the first, won't be the last. Now we have Celsius. There's more to come. There's a lot of people swimming naked in the crypto space.
It works in traditional markets too. It's not exclusive to crypto. It's more rampant in crypto because it's unregulated and there's a lot of crazy stuff going on. But stock markets, that's how Bernie Madoff got exposed, right? So, when the market started crashing, he couldn't cover redemptions, and that's what happens. And by the way, there's a lot of money laundering that goes on in the traditional markets with, stocks, with bonds, with cash. It's just as rampant there, not as bad because it is, more regulated, and you do have to produce audits and things like that, but people still get away with it, like we saw with that New Jersey deli. That
remember that? That was
how much
crazy.
did that thing end up being worth?
It was it was a couple $100 million for a freaking deli. It was like, there, you don't think there's fraud there somewhere, folks? Come on,
it's not just crypto, but crypto is more wide open. But guess what? So this is going to be great for the space because these types of events are going to clear out all the junk.
Exactly.
Regulation is going to come in. They're going to jump in. The founder of Luna, Do-Kwon, the SEC's on him. He's being called. He's going to have to come and show, what's going on, and they're going to get him and catch him if he's done anything wrong. I don't know that he has. Same thing with Tether. These are assumptions of what's happened with Tether, and and they're going to get called to the carpet. And if these things prove true, then they're going to get put out of business, and the space will get cleaned up, and it'll operate as good as it can within regulatory guidelines. And there's still corruption out there, even with regulated industries.
Yeah. This is just, again, I've been warning people that they're going to have a dot-com moment, right? Where all these companies like pets.com, Wedvam were all worth billions of dollars and then went poof to zero. It's happening. I do agree with you that at some point the crypto market will actually be stronger and better for it, but there's billions of dollars to be lost.
It is, and it's unfortunate because I know a lot of people watching this potentially, have lost a lot of money. Bitcoin alone is down 67% right now from the all-time high. And I hear from people all the time that bought back in those highs because, there's a lot of influencers in the space telling people that, it only goes up and it's going to be worth $1 million, and, hodl and, dollar cost average and buy the dip. And, they listen to all these people that a lot of them are teenagers, like the on-chain analysts and analysis, a lot of them are teenagers that they don't have any training, number one. Number two, they've never been through
a bear market,
a bear market, a global macroeconomic bear market like we're in right now, or even a crisis. And, they don't know anything but number goes up because that's the environment they were in. And
by the dip, right. And everything goes up. Yeah.
And, and that's traditional finance as well. That's the narrative on Wall Street. In a bull market, buy the dip because the Fed's there and you had the Fed put and all that. And you and I have been talking since November, December. It's over.
It's over.
No more Fed put. Done. And look at where we are now. And the Fed still hasn't really done anything. Well, I guess we're going to get into that in the next video. But,
yeah, exactly.
The bottom line is you got to be careful who you listen to. You need to make sure you're following people that have been through, a couple of bear markets or at least one. Yeah. Stuff doesn't just always go up forever. It corrects. And sometimes you get, in crypto, it's, drawn down Bitcoin's drawn down 80% on average. Every time it draws down, altcoins draw down 95%. Some of them go away. So you got to be careful. You got to make sure that you're following people that give you a balanced, viewpoint of things that, things can go to all-time highs in the right market conditions, but they can also go where they came from, to all-time lows and go away. So you have to take those things into consideration. You can't just dollar cost average and buy the dip. I'm seeing people out there, it's going down, but I'm still buying. You don't know that it's going to come back. You don't know when it's going to come back. You don't know where it's going to come back to. It has in the past. It probably will, but we don't know where it will land without the Fed, without quantitative easing, without the free money, zero interest policy, and without all the junk that's going to get cleared out of the space that's pumping the prices, because those have been artificial manipulated pumps. Yep. Like I said, by Tether and Celsius and companies like that are just flooding printed liquidity into the space to jack the prices up.
Yeah.
And, a lot of people have been burned, left the space. So it's got to go through that whole cycle to get new people in, new money in. And the institutions aren't going to jump in and start buying at scale and propping prices up at these levels. They're going to jump in and drive prices down so they can get a better entry because they know what's going to happen next. So
Yeah.
it's going to be an interesting cycle to see and watch, but there will be opportunities. This is not a bearish, pessimistic conversation. This is opportunistic. You just need to understand that, there's a lot more potential downside, and then things will settle out and bottom out, and there'll be a good chance to get in, and you might get a 10 or a 20x out of Bitcoin, Ethereum, and some of the other top coins that might make it through this.
Yeah. The one thing I do want to ask you about is Michael Saylor, obviously the CEO of MicroStrategies. I'm sure you know who he is. Looks like MicroStrategies, after Bitcoin's loss today, now has a $500 million loss from their Bitcoin purchases. I'm just wondering, right? I worked as an executive in public companies, and we have fiduciary duties and all of these other things. When does the board of MicroStrategies, because as I understand it, they're still public, basically come out and fire Michael Saylor for borrowing money to buy this thing that's upside down? It's got to be at least talked about. The board of directors would not be doing their duty to protect shareholders if that conversation's not at least happening, I would think.
Yeah, it's taken the stock of the company down as well. And, the CFO came out and said that, hey, we don't, we're not going to face liquidations until price gets to, I think it's either 20 or 21,000, which, right this minute, as we're watching this, I think Bitcoin is at 22.6 and it's still dropping. So, they're approaching liquidation point or margin call. And then what the CFO said is, we have plenty of Bitcoin that we can just pledge. The problem is that now they have to pledge twice as much because the price is down half as much, and they're going to want 50% on top of that. So they're going to have to pledge anywhere from 200 to 400% more of their assets and or Bitcoin, or just liquidate. So at some point they are going to face a forced liquidation if prices drop below 20K, down in the 10, 15K. They just don't have the cash or the assets to fulfill those obligations, because that commercial, so they borrowed money. Number one, they've been using cash from the company, which, to your point, that's just not, well, the board agreed to it, so whatever, it's their deal. They allowed it to happen. They were on board with it. So anyways, treasury is being used to buy Bitcoin. Then they borrowed money, they issued commercial debt, and there's covenants in that debt that's going to say, when the price drops below a certain level, you're going to have to pay this down, or you're going to have to pledge more collateral. So that, I'm sure they're having those conversations right now. And then there's the most recent thing that they've done, which is they used one of the crypto lending platforms like a Celsius, and they actually pledged their Bitcoin. And
borrowed, really?
Yes. So they pledged their Bitcoin, staked it with this group, in exchange for money to go buy more Bitcoin. So that's the big one. That's the one that's going to be a 4x penalty at these prices, where they're going to have to, kind of make that up. So those are the types of conversations that, are going on. And then you see Michael Saylor post on Twitter, "Have faith." So I mean, very irresponsible.
Did he say, like, borrow against your house? I mean, he is going to be sued.
He's told people to borrow, sell their house, borrow against, but he hasn't done what he's been telling people to do. What he's done is he's taken non-recourse debt from his company, his shareholders, and, pledging those assets to lever up and, roll the dice multiple times. So it's not him personally. He's not guaranteeing anything. He's using everybody else's money and everybody else's assets, which, hey, smart.
Yeah, exactly. If you get away with it.
Right. Why not? They were giving it to him. So at the end of the day, when that house of cards collapses, if it does, the only people to blame are the board, because they allowed it. The lenders that lent the money, the commercial paper, the companies that issued the commercial paper, all that kind of stuff.
Yeah.
Saylor was just, taking advantage of the environment.
Yeah.
That we were in, easy money.
Dude, I got to tell you that the board of directors has to be meeting this week. Has to be.
Well, the big thing that's going to come out of this is why banks can't hold these assets, because they have to have so many exponential reserves to cover when these types of things happen. So you're going to see, that conversation about banks that we're talking about holding crypto assets for people, that's going to go away. This is going to be a big issue with the SEC. Can you use corporate treasuries to buy these types of assets? And countries, like El Salvador, they went out and they used taxpayer money. Their sovereign treasury to buy Bitcoin, and now they're way down and they're getting ready to, potentially default on debt. So, these are the things that happen in bear markets. When things are good in bull market, nobody thinks about these things, but, because the narrative is it's never going down. I mean, I can't tell you how many times I heard it will never go below 50. This is your last chance to buy below 50. Then it's 40. This is your last chance to buy below 40, and then 30, and now 20. And really what it is this is your last chance to buy, above. It's the other way around. When you're coming down the hill, I'm always thinking when somebody says your last chance to buy below 40, I'm like, no, it's your last chance to buy above 40, because it's going to correct, and and it's cycles. Again, this isn't just pessimistic or FUD or whatever. It's the reality of the market and the situation, because where we are from a global macroeconomic standpoint, that's the difference that a lot of these kids in the space and teenagers and even traditional markets that have never seen an environment opposite of where we've been the last 10 years. It's different, and it matters, and you can't stop it. You can't just Fed pivot in an environment when you've got, real inflation in the double digits. They're saying 8.6.
Oh, I did the math, just correcting for rent. It's 11.7.
Yeah. I mean, and that whole, inflation is peak narrative and all that. I mean, it's just nonsense. So,
not the way,
this is a very different macro environment, but, there are opportunities. It is a positive, thing that, a lot of the stuff gets flushed out. Things will correct. Companies are going to be forced to operate efficiently, profitably, things like that. So, there's a lot of good things that are going to come out of this, but I know there's people that are hurting, that are down.
Yeah.
It's
an expensive learning lesson if this is your first time.
Yeah. And, it's the stuff that you and I have been talking about. People say, FUD, you're
exactly.
I'm just like, hey,
whatever.
It's just experience. And, you got to learn one way or the other. You can either listen to somebody or you can go through it.
Well, you're right. We were saying about 4 months ago that winter is coming. I think about a month ago, we were starting to say winter is here, and that now we're in it. Sorry. I do want to kind of close on a positive note as everything we do and talk to all my experts. We're going to have a lot of scary headlines for the next year or so across the board, not only in crypto, but just economic wise. And we will be better for it, right? We will come out stronger. We will come out with real value. Real projects will take off. Protections will be put in place. And I think we will build from a much more solid foundation, but also a smaller foundation, because a lot of this stuff is just pure garbage and needs to go to zero.
Yeah. And, I've made my biggest and best moves. My first move at the bottom, 2009, never invested in stocks. And that was my first jump in right at the bottom, because, I understand these things. And, again, in March 2020. So I'm waiting for that third correction now to get to the bottom in financial markets and crypto. We're not there yet. And I posted a tweet yesterday that, this is not the bottom. Yesterday, before this leg down that we just had, and a couple of replies. What do you know? You can't, it's like, okay, whatever. You can either, like, in every conversation, in every interaction, in every situation, every event you go to, book you read, conversation you listen to, there's always something you can take away.
Yes.
And you always want to look at both sides and say, okay, and the greatest investors of all time will tell you, you always want to think, how am I wrong? How could I be wrong? You always want to hear both sides of that equation. So, if somebody that's been through multiple cycles says this ain't the bottom, then question is, okay, well, how can that be right? And how can I be wrong? Versus just going, you don't know what you're talking about, which I don't know for sure. All I know is I've seen this before. I've been down this road before, and we're nowhere near where we need to be from the standpoint of where we're at with economic policy, monetary policy, QE, or QT, interest rate, all of that. We're still correcting. We're not at the bottom of a unwind from all of the, trillions of dollars that's been pumped into the system and jacked it up over the last 10 years.
Yeah. A lot of fun. Greg, where can people find you? Tell us about your YouTube channel as well.
Yeah. GregDickerson.com. Go check out my YouTube channel. I got thousands of videos on there as well. And, I'm keeping everybody up to date with crypto and the markets and all that. Cause this is, there is good news that's going to come out of this. I just want everybody to understand risk reward. You got to look at what's the downside, what's the potential upside. And we know where the downside is based on the last couple of, events that happened March of 2020, where the downside of the markets and where crypto is. The problem is there's no Fed to jump in this time. That's the problem.
Amen. Video number 2. Thanks, buddy.